Good evening. This is the Elliott Wave update for the NASDAQ 100 from Monday, April 4th, 2022. Very strong rally picked up again today in the NASDAQ, in fact, across the board and all the markets. Eventually, the Dow and the Russell were laggards in the effort, but did eventually end up on the day. Now, I have a few things to unpack, so let's kind of dive right into what's going on. The count remains the same for right now, and here we are on the daily chart, and you can see I still have the 5 of the 5 of the 5 marked at that 16,768 level. From there, I have intermediate wave 1, and we're working through intermediate wave 2. Now, I had placed the A wave here, and as I discussed on last night's update, that we were looking for the B wave, and that we may have seen the bottom of the B wave, and that we had the possibility that we could rally up, maybe to 15,050 to 15,100 in that area. It went right through that. So it went a little bit too far for my taste, but not really breaking any areas that would negate it and suggest something different. So first thing out of the gate, we just take this down to that hourly chart so we can take a closer peek. First thing out of the gate is that I've marked it as the B wave. Okay, so the decline that we had last 2 days in the expiration low, and then they rallied it up, but that low that we did on last Friday could be the finishing point for the minor B wave, which would put us in minor C up. But before we do that, we have to consider that this could be A of B, B of B, and we drop back down to those levels that I had been discussing previously, and it went as low as like 13,800 something. And those all still remain in the picture. But now that this is a little bit different, I can add some real quick and then I'll take them off. So what I'll do is I'll just throw some fibs, like, come on, fib extensions, and we'll put it right there. And then put it up here. So even here, and this is very rough. So even here, we're looking 1.618. We could have the possibility of 14,290. But we have additional, all this support. We have 100% of 14,630, et cetera, coming down. So that potential could be, then this would be A of B, B of B, C of B, and that minor B wave would be moved down to ever bottom. That's one possibility for tomorrow. Continued buying and a break above 15,268 or 269 does suggest the following. So I'm going to get rid of this. Remove. No. Undo that one. Yeah. And if it breaks above that level, then we are likely, back out to the daily so I can show it, we would then mark B wave as it is. That would be the whole B wave, and we're in wave C up. Now, if that's the case, and it is an intermediate wave 2, then we have these Fibonacci's that come into play for wave C. And it would keep it as an intermediate second wave because we're not breaking any of the rules, which is that wave 2 cannot overlap the starting point of wave 1. It cannot exceed it. So A, B, and that C wave can get up to 618. So it would be, wave C would be equal to 62% of the length of wave A. That's 16,162. 70.5% of A, 16,365. 78.6, which is pretty much top side, 16,553. That still keeps it below. We're getting close, but we're not breaking the rules. And I still would be expecting a very nasty downturn, C wave, wave 3, whatever we want to call it. They're going to be the same, and it's going to be not a good picture. Now, here's one more possibility of what's happening. And if this rally just continues to chug and adds another 300 tomorrow and 300 on Wednesday, et cetera, which we've seen, the reason that they're taking it up is who cares at this point? Because the situations that have been previously presented by me and others remains. Interest rates are going to go up. Inflation is real. Now, whatever they're thinking here, whatever their reasons are, that's fine. But I believe it doesn't resolve to the upside. I believe eventually it resolves with a very nasty decline. So I'm not sure what their reasons are. So in any case, we can trade it. That's my other point. This is all very tradable, whether you're an options trader, whether you're a futures trader, whether you're a swing position or day trader, there is plenty to do. There's a lot of premium, and the premium will remain in the calls. And so as an option trader, there's plenty of trades to do. On the way up, you can have targets. We just gave 3, but now we're going to get that signal. The signal would be a break above 15,263. If it, or excuse me, 15,269. If it does that, okay, we should start heading up for these levels because wave C will take us there. Now, one more scenario. This, instead of being intermediate wave 1, can be intermediate wave A. And initially, at one time, I had that there. It remains as an alternate view. And that would be this is A, B, and this is the C wave, and this is wave A, intermediate wave A. Now, if that is the case, we'll get that confirmation. Unfortunately, the market would have to break above 16,768. And that would suggest this is the B wave, and it's turning into an irregular B wave. And what that does suggest, we're going to a new high. And if that's the case, here's your first level, 17,051. Now, what it also means is like we have the points where we will know other people are going to start taking different positions because the market is telling you. So you're not missing anything, you're just not participating. There will be plenty to do. But if we get that type of a move and it goes above here, then this becomes the zone. So look at those numbers, 17,600, 17,940. Now, I don't even want to dream of what possibly could drive it up there and still be sold as this is the best thing since sliced bread. We are okay. Economy roaring forward. Interest rates solid, no problem. You know, debt levels are not as high as you think, folks. No, everything's been returned to normalization. It's not there. And I don't suspect they're going to get it there in the next month. So whatever is going on, we have to trade it. So that's my other point. The opportunities cannot be left on the table. There's going to be so much opportunities to make a ton of money. Why leave it to somebody else when we can do it ourselves? Okay. Stepping down off of that soapbox, the final would be, the first one is like to go where if it breaks above 15,269, now we've got a different picture. If it stays below, we have a picture where, okay, if that's going to be the high and they turn it lower, then we're into that C wave down. So it's A of B, B of B, C of B. We're still an intense rally to come in the form of a C wave, larger C wave. So we're still likely going to be heading above 15,262, 63, 69, whatever that number is, excuse me. We will still be going above that. But if we do it tomorrow, then this becomes the B wave, the entire B wave. And we're into wave C, which will turn into 5 waves. We need to count 5 waves up. And we have limitations. And we're looking at the first limitation will be at 618. And that comes in at 16,162. Then the zone actually takes us up to 16,553 because we have in the middle of it 16,365. So that's the zone I'm looking. And if it goes above this level, which is 16,768, then we're likely still in a corrective bounce that can go to new highs that would still be considered corrective. The highs would still remain there. And that would be, this is intermediate A, and this turns into an intermediate B wave as part of a larger primary A wave. So the resolution of that is that, and I'm telling you, nasty decline, crash light, get out of the way, everybody's going to get their heads chopped off. Because the reality is, unless this all magically changes, the market is not just going to keep going. But it will be tradable. I just will not fall in love with it, nor will I listen to any particular reasons as to why. I don't really care. Let's just trade. Let's just make the money that's going to be available and trade and not care about the who, what, where, when, or why. We have limitations. We know levels. We have these. We've worked them out. Continue to work using the Fibonacci. Continue to work with the Elliott. Look at all of your potential. Look at all of the possibilities. As I just laid out 3 that could happen tomorrow. And if we see these levels break, then it moves it to the next view, that next scenario that I presented. Downside, I believe, remains limited for right now. The way they came in today kind of let us know. Unless it's a one-off thing, and tomorrow they take it down as much as they brought it up today, and then some, we can't get too excited because it just could be the finishing of an internal move, and then we still get the run up. All right, I'm going to leave it there. You got your 3 different scenarios. We have the break points. Downside right now could get hairy. So, we could see 200-300 points down or more. But I think it's just an interim like we had for the last 2 days of last week. It's just down and then buyers come back. That would be my take. It would need to break really below 13,823, really way down in here before we'd start to look like, oh, that was the whole thing. That was it. And now we're just resuming. But again, remember, I do believe that one would be news generated. Something is going to tip that scale where nobody wants to buy. So it has to be, I believe, some type of news. Okay, leaving it there. Our next update will be on Tuesday, April the 5th.